Hello everyone, and welcome to our weekly analysis. If you missed our stream yesterday we did our technical analysis stream where you all are able to ask questions, get one-on-one feedback, etc. Today we go over the market, what I see for the week, any upcoming news, as well as futures information and anything else that I deem necessary for the week for you guys to all hop in on. So we normally start here by looking over futures information that we see right here. So this is the S&P 500 index, 5-minute time frame. Futures opened up right here. Futures opened up March 21st, pretty low, about 3886. We hit a low. The high was about 3894, 38945, somewhere in there. Now we went up, hit resistance at this trend line down. We finally crossed over that trend line. We're gaining support right around 389. So that is what I like to see. Last week we had this fall off here toward the end of the, toward the end of the week. March 19th, we recovered, kind of consolidated, couldn't break over this horizontal resistance point that we see right here. Now we're coming back down. However, the nice thing about this is that we have this lower low, and now we are creating higher lows going forward. So what I would like to see from the futures here is to break up out of this nice little triangle wedge that we got forming here. If we can break out over this and start to push back up, gap fill up here, as we see we have this massive candle down toward the end of the day on March 19th, which was Friday. If we can get over this area here, which is the 339 level to 391, we should be able to see this step up a little bit and push higher, push back up into that 391 level. So we are down off of highs, as we see here. The latter half of the week wasn't that great for the market. As we see, March 17th, we hit highs at 378, 388, somewhere in there. And then we were just kind of in this downtrend, somewhat of a pullback. We're not really setting any new highs. Strength is a little bit out of the market right now. I honestly think that the stimulus, inflation, as well as the bond yields rising and everything that's going on recently is just affecting the market. But I'm hoping to have some good news to spread with you during this stream, so stick around for this and we will get into it. So S&P right now, we're down about 0.24%. As we see here, we broke under this trend as we see right now, so hopefully this can recover, and we need to hold that 3887 mark. So moving on to NQ, this is the NASDAQ futures that we see here. Somewhat of the same pattern from last week. We had this dip in the morning, recovered horizontal resistance that we see right here, came down, touched, created a higher low, didn't create a higher high though, so that's a little bit of a concern. Same way with the SPY. So right now we're forming this wedge. We have this uptrend mixed with a downtrend forming this wedge right now. Hopefully we can maintain this 12843. If not, we'll see 12884 and then hopefully a push higher above 12887. So that's what I'm looking at for SPY and NQ. Who knows what's going to happen? There's a lot of time between now and market open. Usually Mondays have been pretty green this year, so let's see this recover a little bit. Could be forming an inverted head and shoulders, pushing up. So let's see a break over 1287 to push back up to 12894, and then above that we can just continue to move up. So those are the goals there. Now to move into earnings this week. There aren't as many as I thought. These are the most anticipated. Tomorrow we have a few China names in here, but other than that, there's not really much on Monday. For Tuesday, we do have GameStop, so watch the volatility with GameStop. There's going to be a lot of money Monday, especially afternoon, and then Tuesday morning going into GameStop for those earnings. So be aware of those. As far as that goes, on Wednesday, we don't really have anything that's catching my eye. Shoe Carnival is one that could be played. GM, General Mills, this one could be played too. So let's keep that in mind. Thursday we have Momo. This one has been gaining momentum, as I like to say. So that's one to keep in mind. Possible run up Tuesday, Wednesday for that Thursday. Blink Charging is another one. You'll have Plug Sympathy as well as Fuel Cell Sympathy off that. Hopefully the EV sector can move up before then. Other than that, we don't really have much on Thursday. And then Friday, I'm not too sure what these companies are. So we don't have too much anticipated. We're in that lull period now in the market. Overall, those are my top watchers that I see for earnings this week. We just really need to hope that the tech sector recovers here. Right now, our FANG stocks, the only one that's been going up is Facebook. We really need Apple and Amazon to recover. However, Amazon and Apple are both looking a little bearish at the moment. Nvidia is the same way. So hopefully we can get this going. Google is looking decent, but it's in a consolidation mode, and Google is a hefty price to pay. So let's see what that does. Here is our sector performance that I like to go through from last week. So last week that we see equity is down, fixed income was up. This doesn't really mean much for the overall market. Forex was down, which means the USD prices were down. Energy is down, metals are down, and agriculture are down. So there really was not big movers either way. Real estate was down quite a bit just due to the fact that the interest rates are going to stay low until 2023, which, I mean, that really isn't that big of a downfall. That's just really what pushed it low. Real estate was up for the 3 previous weeks, so it's not really a surprise to see. What else was down? We had IT that was down, not by much. Materials were down about 0.5%. This isn't really a big deal. The major ones that we see here were construction materials, so that means construction's coming back down to a normal price. I've been hearing quotes here and there that construction is way overpriced right now, so lumber is going for 200-300%, so that's something to keep in mind. Maybe play the bearish side of things on that end. Healthcare was actually up, so hopefully we can get a little bit of a move up this week. I'm going to be watching TDoc Health for this. This is going to be a good one to watch. Vaccine news for Johnson & Johnson and AstraZeneca haven't been the best, so we need to watch that health industry just a little bit closer. Pharmaceuticals didn't really do much, so maybe we can get some penny tickers that really take off this week. Financials were down quite a bit, 1.20%. So banks were down last week. I think that's just due to the Jay Powell speech that we had. That's not really a big deal. JPM, Citibank, those ones went up and then kind of fell back a little bit, but that's all right. Insurance was down. That's okay. Didn't really do much for the overall market. Energy was break even. That's why we didn't see really anything move last week in the market. Oil and gas was up. Energy was down. Really didn't make too big of a difference. Consumer staples. Now, last week, these house products, these were about split all week long, so it's not really that big of a deal for the market either. Consumer discretionary, the main one, internet and direct marketing retail. Multi-line retail and automobiles and distributors were all up. The big one that was down was diversified consumer services. And diversified consumer services, as it says right here, providing educational services online and through conventional teaching methods. So we're looking at Chegg, we're looking at those type of industries. It was down a little bit, probably had a down week. That's not really that big of a deal for the overall market, as we like to say. Communication services was about break even, so we'll take what we can get in this market. Now, looking at what we have on this U.S. economic and events calendar for this week, we have on Monday, we have existing home sales. This one does have a little bit of a market move in it, but it's not really that big. We do have our bill auctions, which isn't going to be much. New home sales is going to be interesting to watch. Those should be up, so that could boost the housing market there that we saw that was down. Durable goods as well as the petroleum status on Wednesday. Then Thursday, we have the GDP jobless claims, which are going to be big ones. Other than that, we have our bill auction, and Kansas City Fed manufacturing index isn't that big. Then we have international trade goods, personal income and outlays, and then consumer sentiment. So Friday could be an interesting day. Thursday and Friday are definitely going to be, definitely a bit more interesting as we get through there. We're hoping for up, but it might not happen. So we just need to be ready, get whatever thrown in our way. So just make sure that you're watching that. The sector news is why I bring that up right now. Investors are turning to their attention that prospects that higher taxes could threaten the rally in U.S. stocks. This was announced last week that now, that tax implication could be going into that 1%. I've also seen some news reports that I got to dive into that it could affect people making $200,000 or more. So that could push us into a bearish market. I'll show you why I say that here in just a minute, but keep all of this in mind. If you'd like to find out, you can definitely go to eresearchfidelity.com and go take a look at this. Powell's speech, COVID trajectory, and F&O expiry to set tone for the markets this week. So as we see here, the Treasury bond was not impressed, so this could boost it up, which means that when the bond yields go up, stocks go down. So Powell will take a few more swings at claiming the market's frayed nerves, as he has three speeches lined throughout this week. This is a major thing here. So make sure to watch Jerome Powell this week. Get in on those, whether they go up or go down. So we're not going to be overplaying our hand. COVID trajectory. Its ugly head in the country once again, major sign that India is entering a much stronger second wave. So keep that in mind. COVID protocols, that sinks the market. vaccination rate, while rising cases and concerning, investors aren't looking at a gloom and doom situation because of the vaccine drive in the country. However, we are getting some pushback from AstraZeneca as well as Johnson & Johnson. So this is all up in the air. So there's a lot of things that can influence the market this week. However, I do have good news going into April. So this is off of Yardeni.com. Thank you to Yardeni Research. This is the up or down month since 1928 in the S&P index. So as we see here, January is normally pretty decent at about 58 up months to negative 36 down months. February is not the greatest. March, we start to see that recovery as we have seen. April is the second best month out of the year next to December. So let's keep this in mind for the up months. This is just the up month. It's not much, but we got something there. As we move down, you'll see why this is important. So the average percentage up. February is usually, even on a good year, only up about 2.9%, normally down about 3.5%. This is a low month that we went through in February. No wonder why the markets were so rough. March, we get a little bit more of an expansion. This downside about minimizes that upside, so we really need to keep that into consideration. We did get an up month in January, so that's why we see that 4.2. April, same thing. We're looking for that 4.3. I would love to see April really move us up here going into that summertime month. If we can get a good boost in April, this will set a lot of people up for success going into those down months in May and June. Then July is the best month of the year for percentage up. So let's get our portfolios ready now for that setup into the summertime. Same way with this average percentage change right here. January, we were all banking on money. It was great. February, really bad. As you see, this is a 1.3 percentage move. Even though it just says average loss at 0.1, this is still a 1.3% from peak to minimal here. That is a huge move. March, a lot of people are break even, not so much in the market right now, just kind of stagnant. April is going to be our best month next to July. We need to capitalize in April, guys. This is a big month coming up. Make sure you are sticking to a plan, being consistent, having that confidence, and never overplaying your hand. Because May, we could see the same drop off, and then we recover into July. September is the worst month to trade. So if you can get these gains now between April and August, get these 3 solid months between April, June, July. Even if we have a setback in August, these 3 months can set you up for the end of the year. So be sure to stay on top of that, as this is going to be a big thing come this year. So we just went over, these market indicators in the market, Jerome Powell's speech, news that we see in the sectors, sector performance, we have earnings, we have the economics calendar this week. Now we're going to go back and I'm going to show you what we mean by I think we're a bit overextended in the market, and over the next few years we could see a pullback. This is not to scare any of you, as we will have bullish times and bearish times no matter what. I'm just going to show you the monthly chart that I am looking at, and we will go from there. So this is my monthly chart on ES1, right? So my monthly chart on ES1, I'm going to take from this downtrend down here back in the housing crash of 2009. We're going to take this all the way up, and we're going to have our lowest trend line, we're going to have our medium trend line, and then we are going to have our resistance line. And our resistance line is going to go from this low back here in August, and we're going to ride this all the way up right here. So right now, as we see, this starts back here in, where do we want to put this? We want to put it on this candle, this first dip. Back in July of 2002, the dot-com bubble, the end of that dot-com. As we see here, ES1 came down and dipped, made a lower low, did a double top, crashed with the housing market, right? This is the double top that we talk about, the long-term double top. However, we came out of that housing market, started to recover, started to do well. We made our trend lines. Then we had our first major dip back when President Trump, or ex-President Trump, was elected back in 2016. This normally happens when new presidents gets elected in. We see this. January, February, when he won, market was kind of concerned. Market reeled. Then we had a bit of a dip back in 2018. I'm not too sure what this event was. It might have been the impeachment. I am not too sure what happened in 2018 here. We had this dip in the market, came down to trend line. Then we had COVID. This is the COVID dip right here. We have our double dip right here. Now we're all the way back up, and we are pushing these all-time highs, as we know, at that 3.9 8, 4,000 level, and we are hitting resistance. These candles are getting longer and longer. We're starting to doji a bit. Now, as we see, this green line right here, we usually touch this. So this is the monthly calendar. What are we looking at here? What, you might ask me, what are you looking at for the long term? What I see for the long term here is I think we can push higher. I think we can get into this megaphone breakout, maybe push to 415. Make new support here, end of year, right around 400, 4,000, however you want to do it. Double top. We normally see a double top trend when these crashes happen. Then I think we crash back down to this 3.8 level, hit resistance, and then start our downtrend. And it could be very, very fast that this downtrend continues. I think we dip a little bit below, bounce up, and then continue our trajectory. This is what I see for the long-term outlook. This is by no means what's going to happen. This is my assumption on it. I think we top out around 410, 420 in that S&P 500 range, dip below, have a false, hit this resistance again, and then finally tank when interest rates and those tax hikes get included, and bam, then we see a recovery. It's going to be a normal, healthy setback. This is just something I'm preparing for now. As we see, we can go up quite a bit before we crash. We've been overbought before we pull back down to this trend line. So let's see what this overbought gets us and see what happens. We might come down to here. We might go lower. Who knows? But this is what I'm looking at. However, for this week coming up, we're going to go back to this. We're going to do the 15-minute for this week coming up and go from there. So as we extend this out here, we're looking at the 15-minute chart. What I would like to see, we're going to look at the hourly chart for this week on the S&P 500. So right now, we're forming a rounding top here. This is looking a bit bearish to me. However, I do think we can push out of this with some good volume. Long term, looking at this, we had a double bottom here. I think we're going to come out of this pretty unscathed, especially if we can make support right here at this 3.9 level. Get back up to 3.9. I think we're going to have a consolidation week, guys. That's my overall feeling of this market. We're going to have a consolidation week. We're a bit oversold. I think we'll hang around in the mid-range, maybe get a boost up end of week, and then go into April, guns a-blazing, and push higher. I hope you enjoyed this stream. This will be uploaded to the Stock VIP YouTube here in about an hour. Make sure to check that out if you did not make this soon enough. And I will see you all tomorrow in the Stock VIP Discord. And let's go from there. Have a good night, guys.